So just to share with you a quick one, right? On Friday, which is about a few days ago, right? KGI actually sponsored an event for traders. So you can see that this is basically the traders charity dinner where a group of traders, mainly retail traders, got together and we had, networking session, dinner, food, and stuff like that. So basically this is all of us in this traders charity dinner. You don't see me here because I'm actually somewhere here. I don't think this is my thumb, but you can see, yeah, here I am, right? So this is me and a few other, seasoned traders. We are all basically like a panel to answer questions from the audience over here. So it was a great event. I really appreciate it. And, the food was actually sponsored by KGI and Kaysen, right? So special mention to them because they actually provided the venue and the food along with it. And all net proceeds, right, we actually donated to the Children's Cancer Foundation. So a big thank you. I'm really happy that, I get to be part of this, and all the effort and everything goes out to, the traders like you. So thank you so much. And this is basically, I think, the highlight of my week. So now back to the markets, right? Back to the markets. So first up, I want to talk about, trends. So I'm sure you know by now, I'm a trend follower. I like to trade trends. And I often get, traders saying, that it's easy to look on hindsight, oh, there's a trend, but it's not easy to trade the trend in real time. Or to say, it can be deceiving, that, trends may look simple, but when you actually try to do it, it may not be as simple as what it appears to be. So I'm going to share with you, right, on how to actually overcome this illusion that, trend trading is, so difficult, blah, blah, blah. So let me share with you, on why traders struggle with trading the trends. Let me tell you why. The number one reason why they struggle with trading the trend is they see a trend like this. For example, this is the chart of dollar yen. They see, lower highs, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. So technical analysis, would tell you that, when you see a series of lower highs and lower lows, you're in a downtrend. So what happens when you're in a downtrend? You should be looking to short. And they tell themselves, okay, I'm supposed to go short. And they see this bearish move lower, they go short down here. Right? That's what they do. And where do they put their stop loss? Well, they don't really think about setting their stop loss because they just go short, and their stops is basically a function of how much margin they have in their account. So let's assume that, their stops is somewhere here. And then what happened? The market reverses, hit their stops as the account blow up, and then market continue its downward move. Right? So this is the biggest problem I see with traders trying to trade with the trend. So let me share with you on how you can actually, improve yourself. I would say how you can actually improve your trend trading approach. All right. First thing first, number one, you need to define the trend. So we actually, mentioned earlier on how you can actually define the trend. You can use, lower highs, lower lows, or like me, I like to use the 200 period moving average, right? 200. I click OK. And if the 200 period moving average is pointing lower and price is below it, to me, the longer term trend is down, and I want to stay short in this market. All right. So clearly, the dollar yen has met this criteria. The second thing I want to do is to ask myself, right? Second thing is, where is the area on this chart I want to trade from? This is very important. Which area on this chart I want to trade from? A lot of new traders just blindly go short based on the quick movement in price, right? The quick sell off, and they quickly go short down here, which is usually the worst possible price to do so. All right. The area that you want to go short is something where you want to basically get value out of this trade. For example, you go to the supermarket, you want to buy stuff which is of value, right? Buy apples when they're selling for $3 for $1. You don't buy apples when they're selling for $3 for $50. So same thing for trading, right? You want to be trading at an area of value. Right? So today we'll be focusing on this, right? We're not talking about breakouts at all. We're just talking about trading from an area of value. So in this chart, what you're seeing is that where is the area of value? Well, if you ask me, I would say the 20-50 period moving average is an area of value. How do I know that? Because I see it being rejected once, twice, thrice, 4 times, 5 times. Right? So I'm guessing, right? I'm speculating that the 6th time it tries to get back to this area of value, there's a good chance that it will continue its downward trend. Right? So now if you're trading from an area of value, how do you know when you'll be wrong? How do you know when you're wrong? Very simple. Your stops should be outside of this area of value. Because if price were to trade beyond the area of value, if it trades beyond the area of value, you know you're wrong on this trade. And it's very simple to just cut the trade because you already know you're wrong. Alright? So this is basically, what you should be looking for when you're trading with the trend. Number one, you look for the trend. Number two is the area of value you want to trade from. And number three is just basically your entry trigger, right? How you want to get on board the trend. So let's talk about another example. Let's talk about dollar Canadian. All right. This is the daily time frame. What is the trend? Ask yourself, is it towards the downside? I'm sure you would agree with me that, in this time frame, on this market, the dollar Canadian, the trend is still towards the downside. So now, where is the area of value? Ask yourself this question. Well, if you to apply the same 20-50 period moving average as what you've seen earlier, it clearly isn't, being respected in this market at this point in time. So is there something else you can do about it? Yes, you can. Why not use your structure of the market, basic, simple support and resistance, right? Like this. This can be now identified as your area of value. So there are a few ways to go about it, right? You don't have to be so static, to stick to one approach. I'm not saying it's wrong, but you can, be flexible, right? If you are trading has if you have different methods to identify the area of value, right? Go for it, right? There is no right or wrong down here, but rather you need to find the approach that makes the most sense to you. I personally trade both the moving averages as well as the support and resistance. So for this example, the area of resistance is an area of value. You have a downtrend going for you. You have this area of value. So if price were to come into this area of value, this would be a possible area that you're looking to go short this market, right? So one of my favorite things to look out for is what I call the false breakout, where price trades higher, then the bullish momentum couldn't, fuel further price advance, and then it smashes lower. So those who are long are basically trapped. So this is why they call it false breakout. So you can easily set your stops above this high, and depending what kind of trade you want it to be, right? If it's a swing trade, you can look to take your profits at this swing low here and here. So these are, the things I look out for when I'm trading with the trend. Okay? So just to illustrate a little bit more about the false breakout, you can see that, for example, this chart over here. Crude oil. Where is the area of value? I would say it's this 20-50 period moving average is an area of value. Am I right? If you look at it historically over the last few months, the 20 period moving average has been acting as dynamic resistance. So now let's talk a little bit about false breakout and traders being trapped. Think about this, right? At this point in time, right? So let's say I go back to somewhere here. At this point in time, there'll be traders looking at this chart and they say that, okay, we have this area of support over here, right? If it breaks, there's a good chance that if this support breaks, right, price may, reverse back, maybe, all the way back to these lows over here. So there'll be this group of traders who are looking to go short, and they'll go short when price break below this area of support. I think if you go down to the 4-hour time frame, it'll be, more clearer. It'll be much clearer over here. So this is the area of support that we are talking about, right? This area of support. The next thing, right, on the daily time frame is that, what happened next is that we had this breakdown over here, right? The candle closed lower. So traders are short and they are probably in the money. And traders who have been long this entire move would start to take their profits along the way. And what happened on Friday? You have this big bullish engulfing pattern, right? It closed higher, back above the 20 period moving average, back above this area of support. So now the dynamics have changed. What has changed? Think about this. The traders who are short, right? The first group of traders who are short, they are currently losing money. Right? Because if you went short on the break of support and then price closed against you, you're losing money. So there'll be those more conservative traders, they'll quickly cut their trades, right? They take the loss and move on. And there'll be this second group of traders where their stop loss is above this high over here. So they're still in this losing trade. Right? So this first group of traders are losing. The second group of traders are the traders who traded this false breakout higher. Okay? So these are the traders which are currently winning at this point in time because they traded the false breakout. And they are in the money, right? Depending how you trade a false breakout, whether you enter the moment price trades back above support, or you wait for a close and you enter on Monday, that's really a different way to trade this false breakout. But there are two groups of traders right now, right? The one is losing, those who are short are losing, and those who are long are winning. So trading is a zero-sum game, right? And this is basically a very fine example of a false breakout. So depending, which side you want to be on. If you want to be on the long side, you can be long and get your stops below this low over here. Because if it trades below this low, chances are is that you're wrong. And it's time to get out of this trade. And if you are short, where will you be wrong? Well, for me, to be honest, if I'm short this market, right, the moment price closes back above support, I'll manually exit this trade already because I know I'm wrong. But of course, there are some traders who prefer to place their stops above this high, and then they will use that to manage their risk. So all in all, right, this is basically what I mean by trading the false breakout. Because false breakout, there's always a group of traders which are winning and a group of traders which are losing, right? Traders who are trapped when they trade this breakdown over here. Okay, so this is crude oil, another example that illustrates the false breakout setup. And last but not least, right, I want to talk about another market, which is also a trending market, but it's a market that, have a look, right? Euro Aussie, this is the 4-hour time frame. Again, is it in a trend? It is, right? You have lower highs, lower lows, lower lows. And the question is, will you want to trade this market? Think about this. Will you want to trade this market? Well, for me personally, even though it's in a downtrend, and let's say, for example, it comes to an area of value, I would not want to trade this market. Why is that? And the reason is simple. This market is way too choppy for my liking. Right? Look at this wick flying up higher, this wick here, this wick here, here. Chances are if you were to trade this market, you'll get stopped up by all these flying wicks, right? Choppy markets. So no doubt it's a trending market, but it's a market that I would avoid altogether. So you can see that, just because you're trading with the trend, there are a lot of different nuances to it, right? Especially, where do you identify your areas of value? Whether is this market choppy or is it a cleaner market, like for example, the crude oil market I shared with you, or the dollar yen. So you can see there are a lot of, factors going to it, right? Trend trading is not as simple as what it appears to be. But if you know what you're looking for, trend trading can be a very powerful way to actually, trade with the markets, because you actually find the area of value you want to trade from. You know where you can actually put your stop loss, because those are areas, if your stops is triggered, you're wrong. And there's a good chance that if the trend continues, the reward will be more than the risk that you take. Okay? So, yeah, this is it, right? So last but not least, just to share with you another market I'm looking at is the Euro Yen. You look at the daily time frame, again, it's not as choppy as the Euro Aussie. You can see that the 20-50 period moving average is acting as dynamic resistance. So where is the area of value that you want to trade from? Somewhere here, right? So you wouldn't want to go short here, but instead you will let price retrace higher, come into this area of value, and then perhaps you look for a shorting opportunity. And how do you know when you are wrong on this trade? Well, pretty simple, right? The moment price breaks above this area of value, you know you're wrong. And it's very simple to just cut the trade. Then the next question to ask yourself is, will you want to ride this trend towards the downside or just take a swing, right? For swing traders, if price comes up here and it trades lower, they just exit their trade when price retests these lows over here. For trend followers who are looking to ride this entire trend, they will ride it, based on their trailing stop loss mechanism, right? Could be a moving average, could be a series of lower highs and lower lows, right? It really depends on, how you want to ride this trend. Okay? So I hope this week's market analysis have given you a little bit to think about, as well as share with you a few potential trading setups that I'm looking at this coming week. So if you've enjoyed videos like this, right, feel free to hit the subscribe button below so you'll stay updated every time I publish a new video. So with that said, any feedback or questions, just feel free to let me know in the comment section below. With that, I wish you all good luck and good trading. Talk to you soon.